Good morning, and welcome to yet another edition of Macro Now, set to be released every Monday morning. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we're going to be contextualizing the rates of change of growth and inflation, not only here domestically, but globally as well. So with that said, we'll start with the global currency market. We had the US dollar up 0.7% last week, taking its 1 month gain back up to 0.5%. You had the euro versus the US dollar signaling immediate term trade oversold, down minus 0.9% on the week, and remains neutral trend on a 90-day basis. The yen versus the US dollar was up 0.2% last week and remains bullish trend on a 90-day basis. You had the British pound versus the US dollar correcting minus 0.9% last week and remains neutral trend on a 90-day basis. And if you look at something like the Russian ruble, that was down minus 1.4% versus the US dollar last week and is now down minus 3.7% in the last month and signaling a bearish trend, as well as the Aussie dollar, which broke down minus 2.2% versus the US dollar last week and is down minus 3.1% in the last month alone and remains bearish trend. What's going to be interesting to watch is the direction of the US dollar here as it approaches the low end of the range, which comes in today just below that 93 handle, as to whether or not it's going to make another higher low, similar to what the one it made at the end of August. Moving across asset classes here, looking at the commodity market, the CRB index has a few mixed signals here, if you look at the CRB itself, it was down minus 0.2% on a dollar up week, but is up 1.2% in the last month and is still signaling bullish trend on a 90-day basis. However, if you look at oil, which was up 0.7% on the week and is up 1.2% in the last month, it remains bullish on a 15-day basis, however, remains bearish on a 90-day. Look at something like copper, which corrected 0.5% on the week, but is up 0.2% in the last month and remains bullish on a 15-day as well as a 90-day basis. But this is where it may get a little interesting. You look at something like corn, which was up and inflated 1.8% last week and is up 8.1% in the last month, signaling bullish trend alongside most of the other agricultural products. If you look at something like lumber, which deflated minus 4.2% last week and is down minus 12.7% in the last month, it has been breaking back to bearish on a 15-day basis and is now neutral on a 90-day basis. Similarly, in cattle, you're seeing that deflate minus 3.5% last week and is down minus 8.7% in the last month, also breaking down to bearish on a 15-day basis and neutral on a 90-day. Lumber and cattle are specifically interesting signals because they were the ones who front run our reflation call back in June when you had the dollar break down from bullish to bearish trend. Taking a look at gold, with gold, the most consequential factor in determining future price action is the direction of real yields. And so it's going to be interesting to note whether or not the Fed is going to continue to cap U.S. Treasury yields around that 80, 81, 82 handle, as it last week had its largest bond buying week since May. And so if they're going to continue to do that, the volatility index for interest rates is going to fall, which is going to continue to remain bullish for treasuries. Taking a look alongside the U.S. 10-year yield falling, you had global sovereign yields get flattened with the Germany's Bund utterly collapsing, now down to minus 0.62%. And you had high yield spreads widen 2 basis points to 471 over treasuries, with the 10-year moving down to 0.75%. Taking a look at some global equities, despite the dollar up week, you had Chinese stocks, which led all major global equity market, up 2.0% on the week and up 1.6% in the last month. That comes on another acceleration and Chinese economic data, with industrial production growth coming in at plus 6.9% in September versus 5.6% in August. I mean, that compares to the U.S.'s industrial production slowing to minus 7.3% for September. And if you look at Spanish stocks, they led all global market equity losers, down minus 1.5% on the week, and now down minus 3.7% in the last month. We have a self-imposed deadline of stimulus tomorrow, along with the meat of earnings, which right now, taking a look at it, you have 10% of the S&P 500 companies reporting an aggregate of minus 18.59%. So we'll continue to monitor that, as well as that mentioned U.S. dollar, which will, approaches the low end of the range, which comes in today below that 93 handle, and waiting to see if that will make another series of higher lows similar to what it had done back in August. So with that, if you have any further questions or would like to divulge further, please feel free to reach out to me directly. Otherwise, thank you for listening, and keep your head up out there.